secara eksklusif bersama dengan Thomas J. Hayes, Chairman and Managing Members Great Hill Capital yang bergabung dari California, Amerika Serikat. How are you, Thomas? It's been a while.
I'm doing great. Thanks for having me, Safrina.
Thank you for joining us in CNBC Indonesia. Just barely 3 days ago, Donald Trump has been inaugurated as the 47th President of the United States of America. So what is your outlook for the U.S. economy?
Yeah, I think we're going to see a very positive, high growth economy like we saw in the first few years of his first term. Certainly positive impact on the economy, positive impact on the stock market. And it's really going to be driven by tax cuts, lower taxes, lower regulation, more business-friendly environment. And I think the other aspect of what we're going to see, Safrina, is a more broadening in the participation like we saw in the first term. People at the lower level of the income strata are going to do a lot better, just like they did in 2017, 2018, 2019. We're also going to see a lot more sector participation. U.S. markets have been pretty concentrated in tech participation, Magnificent Seven. I think we're going to start to see a lot more companies in industrials, manufacturing, banking, energy start to participate, small caps, et cetera. So a lot of broadening and good performance in stocks outside of the Magnificent Seven moving forward.
And also the labor force market, as you mentioned.
Yes. Yeah, there's no question about it. There are going to be better wages. There are going to be more jobs. There's going to be a lot more investment in the U.S., a lot more manufacturing. You know, manufacturing has been in a recession or even a slump for 2 straight years. I think you're going to see some policies and some investment that's going to make manufacturing boom again. That's going to create a lot of high-paying jobs.
And beside the manufacturing industries in the United States, what do you believe will be his key priorities to strengthen your domestic economy, Thomas?
Yeah, I think there are a few, Safrina. Number one is going to unleash the beast of U.S. energy. We have unlimited, beautiful natural resources. Drill, baby, drill. He's going to open up leases on federal lands for drilling, reduce regulations on offshore drilling. So we're going to have an unlimited abundance of cheap energy to fuel industry. You saw the Stargate investment project yesterday, $500 billion. That's going to require a tremendous amount of energy, all types of energy, certainly natural gas, certainly oil, certainly some nuclear is going to be in the picture, certainly renewables, we're going to need that. The other thing you're going to see is lower taxes for individuals, lower taxes for corporation, which is going to foster a lot of investment and high nominal growth, high GDP growth. The other thing you're going to see is a business-friendly environment that's going to attract a lot of foreign investment. You saw Masayoshi-san and others committing $500 billion to Stargate AI infrastructure investment. And just today, MBS from Saudi Arabia said we would invest. They would invest up to $600 billion in the United States. So a lot of people want to do business with Trump and America. And then finally is peace through strength, getting us out of wars, creating a peaceful geopolitical environment through a strong national defense and spending on defense. So those are kind of the core tenets of things we're going to see that are going to lead to growth and stability under the Trump administration.
Right. I would like to hear more, and I want you to elaborate more about his inauguration speech, essential topics with the popular catchphrase, drill, baby, drill. What do we need to anticipate from that as from the emerging markets point of view?
Well, I think that there is a perception that Trump is going to want to do trade wars and tariff, and emerging markets will do poorly. And I think what we saw in the first Trump administration, was exactly the opposite. So the two things that people expected in Trump 1.0, when he ran as the tariff king, was that the U.S. dollar was going to be very strong and emerging market equities would be very weak. After the inauguration in 2017, the exact opposite happened. So right after he was elected, the dollar rallied and emerging market stocks went down. right after he was inaugurated in January 2017, you saw the dollar back off, started to weaken in that first year. You saw emerging markets and China stocks start to do exceptionally well in those first 2 years of the 2017 administration. So I think there's going to be a difference between what people expect, i.e., international emerging will do less well, and what actually happens. I think the whole world is going to do well, and I think emerging market stocks are going to boom. I think that commodities are going to do well, and I think it's going to be fueled by a lot of investment, a lot of growth, a lot of optimism, and good policy, win-win policy globally.
Right. Thank you. Now moving on to the digital assets. How do you anticipate the Trump administration's approach towards the Bitcoin, the digital assets, the cryptocurrencies? Will there be significant new regulation in this particular sector?
I think it's going to be nuanced. Certainly, it's going to be more crypto friendly. He ran on that to really attract a lot of people who own crypto assets to vote for him. And I think he'll follow through on what he promised. So there will be a focus on innovation. There will be a focus on deregulation. You see Scott Bessent, his Treasury Secretary, has spoken positively about crypto. Howard Lutnick, his Commerce Secretary, owns Bitcoin, has invested in crypto companies, vocal supporter of Bitcoin. And then the SEC chairman, Paul Atkins, is expected to take a softer approach to crypto regulation. I would keep in mind, though, that further adoption and further rules are also going to foster more competition, more issuance. So it started out straight away with the Trump token and the Melania token. So, all these folks that are in Bitcoin and Solana and other instruments may start to see a lot more competition for those crypto dollars, because I think there's going to be a lot more issuance of different tokens and different crypto opportunities. So it potentially could have an effect that people are not focused on, which is dilution. People say, well, Bitcoin's the best thing ever because it's scarce. But if the regulation becomes more friendly, you could have a lot more tokens and crypto investments that may, in fact, dilute the couple that currently have a duopoly on the crypto investment funds.
Right, Thomas. And this is Trump 2.0, as we mentioned here. And given the history of the previous trade war, do you think we will first see the possibility of a trade war 2.0 between the U.S. and China under this Trump's leadership?
I think that first and foremost, I think that's a headline that's unfair. I think what Trump wants to do is threaten big, okay, and then negotiate a favorable win-win deal, okay? And if you look at the big focus has been on China. China is a small portion of our global trade. It's about $600 billion of, call it $5 trillion. He came out of the gate and he said 60% Trump's tariffs on China day one. Well, now we're talking about 10% tariffs on China, and it wasn't on day one. It's going to be pushed off till February. So I think, as it relates to China, his number one thing is stop allowing this fentanyl to go through our borders. It's hurting a lot of our people. So he's going to use the tariffs to get the Chinese to cooperate on those issues that are very, very important to the U.S. There probably will be some level of tariffs, but it will be a lot lower than advertised. And then once that framework and agreement is in place, I think it will foster a lot more business between the two countries versus the previous administration that consistently said China was wrong and never got to the table to do a good deal.
But how do you particularly see the relations between Donald Trump and Xi Jinping?
I think they're actually a lot better than is advertised on the headlines. I think they're already communicating. It's been announced that they're communicating. I think there's a level of mutual respect, a willingness to talk and a willingness to come to a table. Look, Donald Trump is an America First president. He wants to do what's in the best interest of America. but he understands in business, in order to get what he wants, he has to have a deal that makes sense for the other party. He's been doing this for his entire career, business career going over 60 years at this point, and he will come to a favorable deal. And I think we'll have very positive relations with China and with our other trade partners after a little bit of volatility to come to good terms. And that's the way negotiation works. You ask for everything, and then you come to a good win-win solution.
Now for the geopolitical situations, given the ongoing humanitarian crisis in Gaza, do you think the U.S., under the administrations of Donald Trump, should play a more active role in providing or seeking a resolution? What do you think Donald Trump's going to do?
Well, I think if past is any prologue in Trump 1.0, we saw record world peace. It was really the situation. So I do think he'll be involved. I do think that will be resolved much more quickly than it possibly could have under the previous bureaucrats and administration. I think that leaders around the world respect Trump and know he means business when he says to come to the table and he's going to do a deal, something's going to get done. So I do see a situation where geopolitical issues are going to be much more muted. We're going to get rid of all these multi-front wars. We're going to come to some negotiated resolutions through Trump, peace through strength. And it will be good for the world, and we can focus on business and global prosperity.
Right. Wonderful insights always from you, Thomas. Thank you so much for joining us in CNBC Indonesia. Take care.
Thanks, Safrina. Appreciate it.